Good morning, ladies and gentlemen, and welcome to your market report. Really glad to have you guys here. Now, here's the thing. The whole thing is starting to set up just exactly like the shows that I've laid out this weekend. We got to get started. Let's open up the charts right here and take a look at what's going on. First thing we're going to start about is China. You know, China just recently injected a big, huge stimulus into the economy. And that's because they were going into a huge slump. Here's what I got to tell you guys. It's become blazingly apparent now at this point in time that the whole Chinese economy has become a zombie economy. You know, you ever heard of zombie banks? In other words, a bank that can't make profits, and the only way it continues to run is being subsidized. The entire Chinese economy has turned into an economy now that has to be subsidized with Chinese stimulus. But they know, the policymakers in China know, absolutely know, that they cannot continue stimulus forever. And so they're looking at tapering back. The Communist Party's looking at tapering back the stimulus measures. But the thing is their economy is going to start to tank if they do. If we look down here in this article first, it says China says its economic growth is improving. Yeah, it's holding its own with the stimulus. But analysts warn it still needs stimulus. In other words, it's a giant economy that's only being run on stimulus now at this point. And it's getting worse. This 6.4% economic growth that the Chinese claimed is a fudged number. All the analysts out there know that it's overestimated. It's probably, to be honest, the Chinese economy is actually shrinking, means that they're estimating it 6.4% roughly higher than it actually probably is, to be honest. But the stimulus might have brought them a little bit over the zero mark, maybe up to 1% or something. But as soon as they stop with the stimulus, it's going to go back into negative growth again. It's going to start shrinking. Their entire economy has started to shrink before this last stimulus. So they're now, what are they doing? What are they doing in China? They're talking about tapering back the stimulus. And they probably will. But the effect of tapering back the stimulus will be an effect that comes a couple months later. And this is all setting up for this recession that we got coming. And the Chinese economy is the second largest on the earth, very close to the United States economy. It can drag us into a recession awfully quick. They're warning here, they're cautioning, they're saying China's growth recovery is not solid yet, and growth could falter again. Not growth. I think that it could falter into recessionary territory very quickly. So now we're also keeping an eye on the Baltic Dry Index. The Baltic Dry Index is very low right now. 790 is very low. It was down into the 600s a month or so ago, but it's back up to 790, but that's still extremely low. If you take a look at let's try the 5-year chart here. You can see that we've dipped down. A good Baltic index, a healthy Baltic index, is around 1,500 or more, you know. And so 790 is extremely low, so I'm keeping my eye on that. I'm also keeping my eye on the German bank, Deutsche Bank. Deutsche Bank today is falling. It's fell over 1.12%. And I'm just keeping my eye on, just fell a little bit more. It's fell down to 1.21%. Keeping my eye on that because they're not going to do, evidently, the merger between Deutsche Bank and Commerzbank. That was a desperate, last-ditch attempt to try to save Deutsche Bank. Now, I'm watching for Deutsche Bank to go down at some point in the future because there's no place else for it to go, let's face it. Let's take a look at the 5-year chart. And you can see it's just down, 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 and now it's riding along on the bottom. It's waiting to fall. And I'm waiting for it to fall. Everybody knows it's going to fall, but the question is when. It's clinging to life. That's all it's doing, is clinging to life. It's on life support. It's the same way with the Chinese economy. The Chinese economy is on life support. I watched a show last night. It was about Italy. And this man that gave the show, he has lived in Italy. He knows the situation that's happening in Italy right now. He's boots on the ground. He's in there, and he's looking at Italy, and he's noting what's going on, and he says it's an awful lot worse than any one of you could ever imagine. He says that there's the rich class in Italy, and there's the working class people out there, and then there's a huge pool of people who have to be supported by the government. And the working class people are just being crushed with taxes. Crushed. And the whole thing is not working because what's happening is it's slowly shrinking in to the working class people. I mean, if you lived in Italy and you're being crushed by taxes, your tendency is to move someplace else. Unless you're collecting a pension off the government or something, and then you're kind of, but the whole thing is just slowly disintegrating. Italy's slowly disintegrating, just like Deutsche Bank, just like China. We got these situations in the world that, I mean, it just could carry over, the carryover effects when this next recession hits. Absolutely. It's going to be huge, this next recession. It's going to be really bad. Let's take a look now at what's coming up in trade wars. It's starting to look like a major transatlantic trade war is coming up soon. And a lot of this has to do with France. For one thing, it says the EU runs a massive trade surplus with the United States in industrial goods. Eliminating tariffs on industrial goods would likely increase that surplus. Now, it says the EU is not going to buy more soybeans and GMO products or chlorinated chicken. Instead, Macron, that's the leader of France, has taunted Trump with huge red flag issues regarding climate change. And it's starting to set up like it looks like an EU tariff. A decision to make tariffs on the EU is going to come by mid-May. So we got that coming. Now, over in the United Kingdom, they gave a 6-month extension to Brexit. And what we're doing right now is there's no talk much about Brexit anymore. But it's a clock ticking down for the next 6 months. Actually, more like 5 months now. They're not getting nothing done on it, from what I understand. They're deadlocked in this whole thing. And so they're just going to run the clock out. And then we're going to have that bounce back on us in a few months from now. So let's get into the markets now. Let's take a look at silver. Silver has absolutely got crushed this morning. Down 22 cents and dropping $14.78. I don't even like to look at this chart. But you know, silver's day is going to come. And one of the things is the fact that compared to gold, the silver gold to gold ratio right now is completely off the charts. I mean, it's ridiculous. This bodes well for silver. It means you can get a lot more silver for an ounce of gold right now. Ridiculously high. Historically high sort of words we're going to use for it. I mean, it's like it can't stay in these territory for very long, generally. It's like out of whack, you know. Let's take a look now at Bitcoin. Bitcoin has been heating up for the last day or so. You know, it's at 55.21 this morning. It's up 4.51% on the day. Let's take a look at cryptocurrency market capitalizations, and we see a very strong Bitcoin. Normally, the Bitcoin dominance remains around 51%. We see a 53.3% in Bitcoin dominance. That's high. That's just like with gold and silver. Bitcoin's doing the same thing gold's doing right now. Bitcoin, I see more and more, I see Bitcoin starting to follow gold, do things that gold does, and starting to move with gold, sort of, but not really, just a little bit. But it's changing its asset class right now. It's changing the way people perceive it. It's changing as we speak, So the Bitcoin price on here says 55.77, and we see Bitcoin going up. We see the altcoins not doing as well as Bitcoin. Litecoin at $78.39. XRP is not doing it's not really doing anything much good at all. XRP, while the other cryptocurrencies have been going up the last few days, XRP's been going in the opposite direction. It was like 33 or 34 cents. Now it's 32.5 cents. Not good for XRP. It could have an awful lot to do with 50 billion XRP being held in reserve. XRP is also reliant upon how much commerce or transactions going to happen, using it as a means to facilitate money transfers around the world. It's depending upon that a lot. Now, Bitcoin, something entirely different. Bitcoin is a hoarder's coin, and it's dependent on the fact that there's only 21 million of them. That's the big thing about Bitcoin. That's the big selling point. Let's take a look at the Dow this morning. 10:02. So the Dow's not going to open up for a little bit yet today. But here's the thing with the Dow. We have seen an enormous run-up in the Dow that just parallels the run-up in oil. Now, we're going to switch the chart over here, and we're going to take a look at the run-up in oil. And you don't even notice when I change the chart that both look the same. The run-up in oil and the run-up in the Dow. Look at this. Okay, here's the run-up in the Dow. Now I'm going to change the chart again. Here's the run-up in oil. Here's the run-up in the Dow. Here's the run-up in oil. Do they look the same? Are they paralleling each other right now? Okay, here's the thing about the Dow. The Dow is extremely overpriced right now. But it's holding its own due to promises by the Fed on these monetary policies. There's hopes that there's going to be quantitative easing and there's hopes that the Fed is going to lower rates. And the Dow is at one of these points where people out there, they just don't know. They're kind of still hanging into the rally, but there's a feeling of dread there. At the same time, also there's a feeling of exuberation that it could go higher, and they just don't know which way to go just yet with this. Now let's take a look at U.S. Treasuries today, and we see most of the board is dropping. The yields are dropping mostly across the board, except for the U.S. 1 year. The yields are rising on the 1 year. 2.43 on the U.S. 1 month, 2.45 on the 3 month, 2.46 on the 6 month, 2.45 on the 1 year, 2.38 on the 2 year, 2.35 on the 3 year, 2.37 on the 5 year, 2.47 on the 7 year, 2.58 on the 10 year, and 2.99 on the 30 year. The only one that's not budging a lot is that 30 year. It's not budging downwards, the yields on it very much. It's staying up near 3%. But all the rest have caved. Right up to the U.S. 10-year have caved. And we see the short end is almost as high. I mean, you can go all the way back down to like 1 month of Treasury debt at 2.43. It's not a whole lot different than 10 years at 2.58. I mean, it's not there's not a big spread there, guys. Let's take a look now at the dollar index today. Dollar index is 97.57 today. And she's rising, and she's getting very strong. There, it's 97.58. She's rising as gold and silver are falling. So we got a mixed bag in the markets, but we're heading headfirst toward a recession. And this recession is going to trigger an awful lot of other things to happen within the markets once it comes, and these other things are huge. Like, I think Deutsche Bank could go down once the recession starts. I don't think the recession is like even a whole year away. I think it's much more imminent. I can't tell you the exact starting date, but the recession is coming very soon. That's all I can say. Very soon. Listen, thank you guys for listening to this market report, and we'll catch you guys in the very next show. And give me a thumbs up. Thanks, guys.